In this video, we are going to talk about the latest stock that ARK just an hour ago published that it purchased. I have been looking at this stock like crazy for the past month, and I'm so glad that ARK finally invested in it. I had a feeling they were going to, but let me tell you what this stock is. I had a feeling that they were going to because it's very innovative and it's very disruptive. There is a $30 billion global opportunity for this stock. There's an opportunity of $25 trillion in annual payment volume, and there's a $65 billion software opportunity as well. So without further ado, let's talk about the stock, let's talk about the financials and the risks involved, but let's get started with this video right now. Hi Raylinaires, welcome back to my channel. This is Supergirl Investing, helping to save the world while making you wealthy. Please hit that like button and subscribe to this channel for more investing tips. And as always, please let me know in the comments below what stock you would like me to talk about. This stock was in one of the Twitter comments, so go follow me over on Twitter. So I had to look at it about a month ago. I currently am invested in this, and I'm a very long-term investor in this one for about 5 years. I just see that it has so many opportunities. This is ticker symbol BILL under bill.com. It says they're champions of small and mid-sized businesses. And what ARK really likes is that small and mid-sized businesses can be very disrupted now, especially with the pandemic. I see this as a huge opportunity because it's in a very unique niche. And it says our mission is to make it simple to connect and do business. So here's it at a glance. Total revenue, 45%. From 2019 to 2020. Now they just had the earnings report. It was phenomenal. So I think that's why the stock is going up so much after hours, plus the fact that ARK just bought it. And also 38% from quarter 2 of 2020 to quarter 2 of 2021. That's what they're expecting. They have more than 109,000 customers, 2.5 million network members, 121% net dollar retention rate. So we'll talk about their business model. It's very recurring and they have a lot of repeat customers. Plus their gross margin is 77%. So I can definitely vouch for this. The back office for the financials is definitely not a pretty picture. They're trying to disrupt that. It's complex and inefficient workflow. So you receive the invoice, you route for approval, you initiate the payment, and then you reconcile it. This has a lot to do with in-house, and normally QuickBooks helps with this, which leads to frustration and uncertainty. And again, this is something that I know way too well. There are way too many human errors. It's manual. It can be inaccurate, lots of errors, as I said, lack of transparency, and it's paper-based and not secure. So their solution for this is to receive, approve, pay, reconcile. Receive bills directly via online inbox, view and approve bills online from any device, pay, enable e-payments, and simply click pay. So it's very user-friendly. Reconcile, automatic sync with accounting systems. Accounting systems, they're talking about like QuickBooks or Intuit. Our target market segments. Now this is really huge. These are the expansion opportunities that they're talking about. So right now with domestic, it's a $9 billion business opportunity. And then globally, it's a $30 billion global opportunity. They're targeting sole proprietors and large companies, $65 billion in software opportunity, and a $25 trillion in payment volume. Now they have many things that they're doing that's innovative, that sets them apart, and one of them is the purpose-built platform for SMBs. And they're basically automating this whole financial situation, and they're making it very scalable. So the products are accounts payable automation, accounts receivable automation, and payment services. The value-added services are two-way sync, frequent stats updates, treasury service, custom user roles, document discovery, tech and architecture, mobile capabilities, partner integration, payment and risk management services, infrastructure and operations, security, privacy, and data protection. Foundational elements: data assessed AI, machine learning, network. So this is a lot of AI, a lot of deep learning that's going on as well. Another thing that sets them apart is their efficient go-to-market, and this is the accounting software providers. You'll notice that Oracle is in there, QuickBooks is in there that I mentioned. They have financial institution partners with JP Morgan Chase, Bank of America, Wells Fargo. They have accounting firms and direct to SMB. So 2.5 million network members, brand awareness, inside sales, advanced digital marketing capabilities. And they also have so many expansive drivers. This is what I love about this company. So they're taking on new customers, they're increasing their existing customers to make them buy more products as long as they love the original products, growing the number of network members, developing platform capabilities, expanding internationally. So as I said, they were up about 10% today, from today and after hours today. So let's look at the financial profile. I do think it's a little bit on the expensive side right now, what it currently is, but I do think if there's a dip, it could be a very fruitful stock to be in. So financially, let's look at the numbers. $184 million in trail 12-month revenue, 59% core revenue growth. So this is a high growth stock. 77% gross margin, beautiful, we love it. 86% from existing customers. This is their core revenue. They get 86%. It's very recurring. 121% dollar-based net retention rate. 5 quarters payback period, so it's a very efficient business model. Their core revenue comes from subscription and transaction. So subscription revenue, as you can see here, is 49% per user. Pricing for use of our platform, they have a fixed monthly or annual rate, which means it's recurring monthly, which is some of the best business models out there. They have price plans that depend on the feature and functionality that your business needs, so they cater to your business. The next one is transaction revenue. So usage-based fees collected for each transaction processed through our platform. So they have fees for current customers, for add-ons, if they want extra features, charged on either fixed or variable basis. So basically you can add on monthly and just pay them monthly for that, or you can add on and click pay as soon as you want that add-on. Their additional revenue comes from float revenue, and that's just 3%. So what I love is they have a very strong revenue growth. Total revenue, 45% from 2019 to 2020. For their core revenue, they grew 59%, growing customer adoption and uses. So this is their growing customers. Our 27% increase in customers' transactions processed is an increase of 16%, and total payment volume is an increase of 40%. So they're doing really well. Millions of businesses and top accounting firms actually use this to automate AP and AR. So basically you capture it, it's approved, and you pay and sync it to your financial data. So it's super easy to do invoices. And you can also bring new payment capabilities to your business as well. So it's not just AP and AR. And as I said, it's powered by AI or machine learning. So they take out duplications, they take out the human error. You can work with this anytime, anywhere, because it's done on the cloud. And over 80% of the 100 top US businesses use Bill.com. Now, I love this because the plans start at $39 per month, and that's obviously for the individuals, for the small businesses. So it's something that has a very scalable plan, and once you start out as a small business or an individual and get hooked, and then you grow your business, that's when you can have the $45 a month plan. Then you can have the $69 a month plan, and then they have a custom plan. So it provides a really good, reliable way to get more revenue year over year. If we look at how much it is right now, after hours, it's 153.5 with a market cap of $11.35 billion. So I would say it's It's a little bit on the expensive side, but it's definitely disruptive. It's definitely innovative. And as I said, I've been watching this vigorously because I did think this was something that was very innovative. I'm glad that was good. And of course, I said they just released their earnings report, which is another huge catalyst for them because they beat all expectations. It was a lot better than anyone expected. So the core revenue increased 59% year over year. Total payment volume was $35 billion, which is up 40% year over year. And transaction fees increased 98% year over year. So this is huge. This is better than anyone was expecting. And they're expecting the growth to be incredible for the next few years. And especially if ARK Invest is finally willing to take the chance and to invest in them, it definitely says something about the company. For the next 5 years should grow exponentially. And now that you've seen the great financials, you've seen what it does and how it really helps accounting people or people who are studying accounting like myself, it is a really helpful tool. Thank you so much for watching this video and seeing the newest stock that ARK has bought, which is ticker symbol VILL. Please let me know your thoughts on this one. I would love to hear from you. Are you going to buy it? Do you think it's expensive? Do you think this is a new disruptor? Or are you just not interested in it? Please let me know, and please let me know in the comments what stock you would like to see next. Please leave a like and subscribe to this channel. I love each and every one of you. Go save the world and be wealthy. Bye, Raylinaires.